So now let us look at part three of this video series, three-part video series. In the first part, we looked at how do you identify whether a stock is strong comparatively, technically, and fundamentally. Depending on whether they are strong or weak in each of these three departments, you come up with 8 scenarios, out of which we already discussed 4 scenarios. In the previous video, we discussed this scenario where comparatively the stock in your watch list was strong, and then we looked at combinations of technical and fundamental. Green means strong, red means weak. Okay, now let us look at the next 4 scenarios where comparatively the stocks are weak. So these scenarios, comparatively weak means the relative strength of the stock could be less than 70, industry rank could be more than 40. Okay, this is for people who use MarketSmith in India or abroad. Okay, and maybe there is no institutional demand or the demand rating is very low, so comparatively it is weak. So let us look at the first scenario and see what should be our course of action in terms of these 5 points, exactly as we did in the previous video. So let me take my marker. So we are looking at this scenario. So let's say the stock in your watch list is comparatively weak, but it is technically strong, fundamentally strong. So nice tight base on the right side. Maybe it's an early stage base, and fundamentals are also strong. So sales, earnings, margins, return on equity, everything looks fine. How do you handle this stock? Before I answer that question, please understand that these 4 scenarios, in each of these scenarios, the comparatively the stock is weak, which means the risk in these 4 scenarios is more than the risk in the previous 4 scenarios, which we looked at in the second video. So obviously, when risk goes up, your position size should come down, and in terms of trade execution, you should be micromanaging the trade, because the more the risk, the more control you should take. If you just buy the stock and leave, oh, you are taking too much risk. Okay, don't get into all of that. So please understand right upfront that you are getting into a risky situation because the stock is not showing strength. It is not showing relative strength. However, let us look at this situation now. Let's say the stock meets this criteria, this particular criteria. Now, what does this mean? What is happening with the stock? Well, what is happening is you have a stock which is technically and fundamentally strong. However, the market has not yet realized its potential. The market has not, so it's like a hidden gem. Okay, so the market has not realized its potential. That is why it probably doesn't have relative strength. But eventually, there might come a time when people will wake up and see, boss, this looks technically and fundamentally strong. They might start buying the stock. And when it eventually breaks out, the relative strength would go up and the comparative strength will come back. So this will turn green when the breakout happens. Okay, so this is a fantastic opportunity. I would say out of all 8 scenarios, this is the one that I like the most. I will tell you why. Okay, in this scenario, where all departments it is showing strength, probably the stock is extended. Maybe you are buying a middle stage base because the stock is showing relative strength. So if it is showing very good relative strength, probably it has made a nice move before forming that base which you are looking at. So instead of early stage, you could be buying middle stage, which is slightly riskier. But here, okay, since there is no comparative strength, that means you could be buying an early stage base like base 1 or base 2. So this is a stock where you could get an early entry. Okay, and if the stock breaks out, if the stock does what we expect it to do, okay, then we are looking at a huge opportunity here because the stock is just starting its rally. Okay, what do we expect the stock to do on the breakout day? We want it to give us price confirmation and volume confirmation. If that happens, this figure will automatically improve. It will, over a period of time, in couple of weeks, this might turn green. And when that happens, then you're dealing with this scenario. Okay. You're dealing with a positional trade. Okay. So the type of trade will be positional, assuming it breaks out. The risk obviously is going to be higher. All four scenarios, the risk is higher relative to the previous four scenarios because there is no comparative strength here. Okay. So compared to previous four scenarios, the risk is high. But if you look at the stock individually, the risk is low because we have technical and fundamental strength. There is something that is backing the stock. There is some tailwind behind that stock. Position size obviously is going to be smaller compared to the previous scenarios. See, in the previous four scenarios, there were two scenarios where technicals were weak, right? So that's a wait and watch scenario. So when I say previous four scenarios, I'm actually talking about the two scenarios in the previous video. Okay, the positional and the swing trade. So obviously, since the comparative strength is not there, so position size you would manage. You would not go with a normal position size. You will keep your position size smaller, maybe half your normal or maybe 75% of your normal position size. Trade execution, well, you have to micromanage the trade. Okay, at least give it 1 hour. Okay, when you buy the stock, okay, give it maybe half an hour to 1 hour. See if the price action, volume action is there. If it's not there, just get out of the stock because you know that could be a fake out. So you have to micromanage this trade. Stocks which don't show relative strength, stocks which are coming from poor industry groups, the fake outs are more likely in those kind of stocks, even if the technicals and fundamentals are good. Ultimately, it's the verdict of the market that we have to respect. So overall, I am saying micromanage the trade. Okay. At least wait for a close above the yellow line on the 15-minute chart, that too on high volume. Okay. If the stock starts to move extremely rapidly within that yellow band, accumulate some shares. Okay. Don't wait for a close because the volume is coming very fast. You might miss out on that stock. So you have to adjust. Okay. You have to be flexible. You cannot apply the same rule on every stock. Okay. Trade execution is not easy. It is a complex task. Okay. You have to be very quick in your timing. You have to be in front of the chart. You have to be observing volume minute by minute. And when you see nice traction coming into the stock, and if you plan to buy, let's say 500 shares, at least 300 you should get before the price runs away from you. Okay. Trade management. Now, this depends on whether the comparative strength increases or not. So if the stock breaks out, starts to go up, if this turns green, then you're looking at a positional trade, right? So you would hold on to the stock as long as it remains above the 50-day simple moving average, which is our blue line. But if this doesn't seem to improve, probably you are not earning much return. So maybe take 8 to 10% return, come out of the stock. Okay. These are the things you can do with the first scenario. Next. Now, in this case, see, comparative strength is not there. Fundamental strength is not there. Now, fundamentals do not change overnight. Okay, so if you are looking at the stock today, this is red, you will not see this turning green tomorrow. You will have to wait for a quarter to see that growth. So, in this case, you will have to wait for a quarter to have confidence in taking the trade. Now, even if you end up taking the trade, see, this is going to be a swing trade. You are taking the trade with the hope that it will break out, okay, and comparative strength will improve. So it's an extremely risky trade, okay, very, very, very risky trade, riskiest of all, because you're assuming that comparative strength will come, the stock will break out, which will cause the comparative strength to come. And when that happens, then you are dealing with this kind of scenario, which is a classic swing trade. So if this turns green, if the stock does break out, if you get price and volume action on the day of the breakout and you manage to buy some shares, if that circle turns green, you are looking at a swing trade, which means double digit return in 2 to 4 weeks. That is my general understanding of a swing trade. If you are getting double digit return in 2 to 4 weeks, That's a very decent return. You could use that profit to finance the risk on your next trade, which could be a positional trade. Okay. So risk is very high. Where is my cursor? Yeah. Risk is very high. Type of trade is going to be swing, potential swing, not swing. Okay. Potential swing. Position size has to be small. Trade execution, well, you have to micromanage the trade. If it drops one tick below your yellow line, you should be out of the stock. Trade management, well, that depends on whether this circle turns green or not. If it turns green, then we are looking at a double digit return in 2 to 4 weeks. If we get that, we come out of the stock. Okay. If this doesn't turn green, then we should be getting ready to sell the stock, maybe sell partially. Okay. Sometimes what happens is the stock displays so much strength price wise, the stock could shoot up 15% in a single day. In those cases, obviously this is going to turn green. In those cases, you could choose to partially sell the stock. So if you have, let's say, 500 shares, I mean, sell 300 or sell 250 shares, keep some shares. Okay. You will not lose money, which is good for your psychology. Okay. Coming to these scenarios, well, obviously, when technical strength is not there, your approach is WW. Okay. Wait and watch. When this turns green, then you will know whether you are looking at this scenario or this scenario. Okay. So it's a wait and watch game. Here, if the stock falls in this category, you are obviously not going to take the trade. The stock should not show up in your watch list in the first place because the technicals are not there, which means maybe it has got less than 10 candles in the base or less than 4 points in the base. Okay. Or maybe the blue, green, red is not there. Maybe the price is below the blue line, things like that. Okay. For some reason, technically, it's not up to the mark. So you have to wait and watch these stocks. When they start moving from this scenario to this scenario, and you buy, wait for these for stocks to move from this scenario to the previous videos two scenario, which is swing and positional. Those are our main uh, categories of trades. Okay. So just to summarize, you have comparative strength, technical strength, fundamental strength. How do you determine that? You ask only 3 questions in each department. Don't ask yourself 10 questions because you are going to analyze hundreds of stocks. Okay. Per week. So just look at 3 factors and determine whether it is comparatively strong, technically strong, and fundamentally strong. Okay. Based on whether they are strong or weak, you have 8 different scenarios. Here you have comparative strength, and then you have permutation combination of technicals and fundamentals. Next, you have comparative weakness, and then you have permutation combination of technicals and fundamentals. So I hope this 3 part video series has added value to your trading journey. I hope this will help you improve your trade execution because a lot of students had asked me, sir, which stock we should, on the breakout day, which stock we should hold on to and which stock we should immediately sell and get out of that trade. This kind of categorization will help you. Any stock that is on your watch list, try to put that stock in one of these 8 categories. Okay. And I have discussed each of the 8 categories with you. You now know what to do. Maybe you would have taken notes. You now know what to do. You know which trade to micromanage and which trade not to micromanage. You could give it some room to fluctuate. You could give it some time to fluctuate. Okay. Thank you so much for your time. If you have any feedback, questions, comments, let me know. Please like, comment, and share this video so that this video reaches those people who genuinely want to become professional stock traders just like you. Again, thank you so much for your time. Thank you so much for your support on this YouTube channel. Give me some video ideas so that I can create more videos like this for you. Thank you so much.